What's up, everybody? Welcome back to the Scratch Agency podcast, hosted by Scratch Agents for Scratch Agents. My name is Stephen Turnbull, founder of T5 Insurance Services in Clinton, New York, and I'm joined by my co-host today, the one and only, you already know, hold your applause, Mr. Shawn Fitzgerald from Sound Harbor Insurance in Long Island, New York. Ladies and gentlemen, this show is brought to you by Hawksoft, your family-owned and operated agency management system serving independent agencies with teams from 1 to 300 plus employees. David, an agency owner from Ohio, has been with Hawksoft for 17 years, wouldn't consider leaving due to the product support being the best in the business. Mr. Fitzgerald, how you doing today?
Great, sir. I'm excited to talk to Rick. Rick, just so you know, I was first introduced to you through a podcast you did with Fernie when he was over at Jag Insurance. And I must have watched that video 20 times. And it really kind of like opened my eyes to the other side of insurance that maybe I was kind of just blind to or naive about, but it really opened up my eyes to a lot of what is done wrong within the industry. So I'm excited to have this convo today.
Yeah, well, that was a long time ago. I don't know how many years ago that was. Do you know when that original podcast was? It had to be, I don't know, 5 or 6 years ago, maybe 8.
Yeah. It's been a while, and I've listened to the podcast and some of the stuff that you've had in between, and I think the agents listening today will get a lot of value from it. So I'm excited to have the convo.
Well,
Rick, if you can just start.
I didn't know.
If you can, would you go ahead? I'm sorry.
You know, Fernie's working for me now, right?
I saw that. I just reached out to him today. I got a call later, so I'm excited to connect with him. Yeah, he's over at Prime, right?
Well, good. Yeah, I mean, again, I've been doing business nationwide for 43 years. I've met lots of producers, and Fernie and I clicked. Again, I think it's about seeing the future. I mean, it's like when I was a kid, we had typewriters and phones connected to our walls. And, everything's evolved over this 43 years, and it seems like insurance is stuck in the past. It's not getting better. It's getting worse, more exclusions, less markets. It doesn't matter where you turn. The latest thing is Trump saying he's creating this reinsurance fund for the boats have to pass through the canal over there. And, I didn't know anything about boat insurance till I'd learned about all the American Club and all the clubs that are around the world that basically provide most of this coverage, but it's all reinsured by Lloyd's mostly. So, but it's like Florida homeowners. It's when disaster strikes, it fails every time. And, California's showing you it just isn't coastal states. It's anytime there's any catastrophe, it fails. And so, there's a problem and we need to fix it. It's our job.
So, Rick, can you just give us a little history of the company, of XINSURANCE, Prime Risk Partners, everything that you have going on there for some of the listeners who might be listening to you for the first time?
Sure. In 1985, there was an insurance crisis. I had been in the business in my dad's MGA since about 1980. And then in 85, the world went crazy. And if you look at newspapers, the New York Times, Wall Street Journal front page was, people can't get insurance. They were out of business. The, group that I kind of linked up with out here was the Helicopter Ski Guides. Snowbird right here, Greg Smith, who was the owner at the time, Joe Royer at Ruby Mountain Heliskiing. These are small seasonal businesses that don't make a lot of money. They have a very small season, and they're highly specialized. They're like world class. That's how they were sitting where they sit. So I still insure, most of the helicopter ski operations today. But since 1985, when I was able to do that because Congress passed the Risk Retention Act, which was a federal law that allowed liability insurance to be sold on a group basis, kind of like life and health is. If I have my employees here in Utah, I buy a group policy here in Utah, and employees nationwide join that master policy. So that's really what the Risk Retention Act of 1985, and most people don't think it's that big a deal, but Congress doesn't pass laws real easily, right? I mean, if you actually look at what they actually can get passed, it's normally because there's a real problem and they all agree, hey, we need a solution. So it just freed up, state regulation. I was headed to the Outfitters and Guides Convention in Cheyenne, Wyoming. And I don't know, how old was I in 1986? I was young. And the commissioner said, if you come up here, I will have you arrested. They want you to buy insurance from insurance agents in Wyoming. That's the state licensing and restriction. So the federal law just broke up all the state lines. No, you get it in one state, Utah, and now you can sell liability insurance to people in that same industry. It's just like Outfitters and Guides was the one. We have a construction one. We have a chemical applicators risk retention group. So for 10 years, I was an MGA managing the claims, underwriting those books of businesses. And over that time, I would find myself arguing with underwriters on what I saw as common sense ways we should approach it. But normal insurance rules don't agree with common sense. And then you got the lawyers on the other side, and you're arguing with them about how to defend claims, what you do, and to me, the most important thing is, go back to California wildfires, go back to any event and say, okay, let's do a mock claim. Well, if you go backwards, you don't have to do a mock claim. You can look at actual claims. And, 60 Minutes did the story on the lady down there after the last storms. And, they offered her $13,000 and she needed $350,000 to fix her house. Well, what were the problems? Well, they underinsured it. So what agent and what insurance company would continue to let insureds do it the wrong way, right? We're a fiduciary. So after the last storm, everybody's complaining about rates going up. And I think it was the Miami Herald or whatever newspaper still printed down there. They had front page story and they had a guy who said, I figured out how to get cheaper insurance. What he did was he lowered the value of insurance on his house. I mean, anybody that understands what's going on in the world of insurance would say you're an idiot. But he was a hero. And so, I tell people all the time that insurance buyers, I don't know what they're thinking, right? They'll buy a Ferrari. They'll buy expensive watches. They'll do all kinds of stuff. No, new roof. If you get a roofing bid for $1, you wouldn't take it. But if some big insurance company offered you a big limit for $1, I think most people would buy it because they think this is about screwing each other, right? I just take the cheapest thing because they're trying to screw me and I'll try and screw them. And I'm like, look, let's stop trying to screw each other and actually go through the claim and I can make you happy. Right? But you can't do it if you don't underwrite it properly. So you got to insure the value. Most homeowners policies have, I call them cans of corn, because they give you a preset limit on your contents. I don't want contents. I want my house covered. Right? I can handle my contents. But, as an insurance company, when you insure a $10 million house and you give them $5 million of contents, that's $15 million of exposure. The other problem with that is insurance companies, I think, well, nobody has that much contents, and most of it's going to be depreciated anyway, so we're never going to pay that. Well, like in California now, the lawyers that are suing, and in Florida, the lawyers that sue, they want the whole limit. Right? So you're setting up the lawyers to come after you. Why don't you say, hey, how much contents do you have? And, you think you have $500,000 worth? Okay, it's 10 years old. So it's probably depreciated down to zero, right? Do we really need more contents or do we need better coverage on your structure? Let's give you everything you need. Earthquake, wind, flood, earth movement, sinkhole. What does it matter? It doesn't matter to me what damaged my house. All I give a shit is I got to fix it. And if insurance doesn't give me the money to fix it, we should go back to the beginning and say, well, we set it up wrong. Right? And I honestly think lawyers, are the happiest guys on the planet because everything we do guarantees them more money, right? Habitational risk, like I write with Fernie, they don't have firearms coverage. They don't have assault and battery. They don't have active shooter. So you take all this coverage away. What does that mean for my insurance partner? It means I'm not covering it, so he has to. That's not a solution. And deductibles are evil too, right? I know that because as an insurance company, so after 10 years of, doing it under the Risk Retention Act with Homestead Insurance Company, I was trying to get my own insurance company started, trying to raise $20 million and was unsuccessful at that. But I found a company in Chicago, Prime Syndicate, that was on the insurance exchange, and the exchange was going broke and most of the companies were failing. It had $2 million in surplus when I took it over in 1995. And I tried to save the exchange and, see the value in that. Obviously, Lloyd's of London's been going on for 300 years, and the exchange was in Illinois, was made to compete against Lloyd's. There was also one in Florida, the Florida Insurance Exchange, that was formed in 1985 to kind of provide solutions to the crisis. In 95, I took over Prime Insurance Syndicate, formed Prime Insurance Company, and merged the syndicate into it. And then in, I think, 2014, RLI, a publicly traded insurance company, invested $7 million. And since 2014, they've been paid over $40 million in dividends and reinsurance profits, and the value of their stock is over $50 million. So I've made them a bunch of money, but they really don't like me because I do everything the opposite of what they think I should do. And, they and a lot of other people want me to go public or sell out to them and become part of their bigger company, just like Fernie with Hub. I actually told Fernie, don't sell to anybody. And then, he was in a position where he wanted to do some transaction. And I know the guys at Hub who originally started that. And I said, those are the best guys to go with if you go with any of them. But they're all kind of the same model, right? To me, it doesn't matter whether it's Acrisure or AP or Hub. They're all trying to build these mega growth entities through acquisition. And, what I know about private equity is that they have a window, right? If they give you money, they got to get out within 3 to 7 years. I mean, again, if I had to buy them out, and I told them, I said, why would I do that, right? If I'm actually doing my job, making us money, why do you want me to stop to buy you out? Why wouldn't you keep riding with my model if you see the value in the future insurance world, not the way insurance has been done? Everybody hates insurance. That's why my podcast is called I Hate Insurance, because I know that communicates with everybody. And a lot of people say, I don't hate insurance. I love insurance. And I look at them and I'm like, well, you're a liar, or you've never used it, one of the two. And,
Yeah.
When you're young, you can sit and think, I'm never going to have a claim. I thought I would never sue anybody. I'd never have a claim. Jake with State Farm is one of my favorite because that's my claim personally. And it amazes me that, it's so inefficient. So some guy runs into my boat, right? And I deal with this every day. You sue me or one of my insureds because we crashed into you or we ran over your mom in the crosswalk or whatever. The most important thing to do on any claim is figure it out ASAP, right? Like a Florida homeowner's claim. Do not hire some adjuster who's going to show up with a clipboard and take 6 months to give you a report. It ain't that hard. If you underwrote it properly going in, you should show up. You don't have to measure anything. You should know the age of the roof. You should know exactly what you're going to do. And within a week or two, you should write them a check, because that's what everybody in California needs. The California people are in trouble right now because most of them bought coverage through the state program. The state program only gave you $3 million in coverage maximum. So now your house is burned down. It was a $10 million house. I say We as an industry screwed up. We should have never allowed that. And they should just go write them a check for the $3 million because there's no better day than that. But what they're going to do is they're going to send out an adjuster with a clipboard and they're going to say, well, you're underinsured, so you can't get the 3. You know, depending on how much you should have carried. If it was 10, you maybe get $1 million. But that entity doesn't have the ability to pay anyway. They're trying to assess all the people who didn't have a fire claim and get them to pay more. So, I mean, this is like a lawyer's dream. I mean, if you were a lawyer and your enemy could do the stupidest things on the planet to make you more wealthy. Now, again, I don't like lawyers either, right? Most lawyers will represent you for 3 years, bill you all kinds of money, and then tell you to take a shitty offer. Right? One of my own employees at a house in Fort Myers, you know, got offered something, sued for 3 years, and then the lawyer said, yeah, dude, just take the 20 grand. And he did. Like, you know, that's like being a Super Bowl team on the 1 yard line and not having a play. It's like, we're just going to make it up. Right? I guarantee you don't get into the Super Bowl by making shit up. You have a strategy and a plan from before the season. And then the season, you refine it. And, you know, insurance is supposed to be expert at what we do. So whether it's State Farm, you know, and my boat claim, I call them up and I'm like, look, this isn't my fault. Right? Some guy ran into my boat. It was tied up. That's called an elision. So he's responsible. And I want you to be a good neighbor and help me go to the guy who ran into me and their insurer and say, just, you know, let's work this out. Well, they're like, oh, we don't do that. You're going to have to manage your own claim. We don't do boats. And I'm like, well, you should have told me that when you took my money, right? Tell me, oh, we'll insure your boat. We have no clue what we're doing. So anyway, I hire a lawyer and sue the guy who ran into me, his carrier's Travelers. They deny liability for 2 years. And then after 2 years, my lawyer comes to me and says, guess what? Good news. They'll admit liability. I'm like, so it took them 2 fucking years to figure. I mean, how hard would it have been to come down there and seen it in a week? So I've spent 70 grand and I know they've spent money too. And the lawyers again love how stupid we are. So, you know, State Farm, I'm sending them the bills and they say, oh, we only pay 5 grand for transportation of boat. The bill was 30 grand. And I keep telling them, look, I don't want your money. I want you to help me go after the responsible party, which is called subrogation, right? And under the policy, under the liability section, they have a subrogation duty to do that for me. They ignored it. They didn't do that for me. They told me to do it. So then my lawyer say, you know, sign the deal. You know, this will make it better. And I'm skeptical, but I sign it. I send them the deal. State Farm had sent me $100,000 out of the $400,000 total claim. Immediately, Travelers sends them their money. So State Farm gets their money back. So, like I always do, I think my job in life is to attack the bully. Whether I got arrested in Chicago and I had to sue them and win, I'm suing State Farm now. So they depose me, and this lawyer keeps reading the policy, right? He doesn't want to talk about the claim. So we only pay $5,000 for this. And I'm like, so is that what a good neighbor would do? Right? If me and you are neighbors and the guy across the street's kid runs through both our fences and hits our houses and damages it, are we going to start arguing with each other? Or are we going to walk across the street as good neighbors and make the person responsible pay? So again, Travelers didn't do their job either. So these are the 2 biggest companies on the planet, and they're outsourcing important shit, and they ain't a good neighbor. And it isn't a good umbrella with Travelers either, right? They're both trying to save money instead of be a good neighbor. And if they would be a good neighbor, they would save money in the long run and they would make happy customers. So after my deposition, they escalate the claim to another lady. And she sends me a check for $62,000 that they say they should have paid me on the first party coverage. And I'm sitting there thinking, if I did this in my company or one of my employees did this, that's like totally unacceptable. I mean, it's not even anywhere close where I think you can defend it. By paying me more money, you've admitted you screwed up the only side of the claim you were handling. And so, every time they make a move, they look stupider. So no wonder everybody hates insurance. It doesn't make sense to me. So, the bottom line in all this is most people don't like lawyers. So we can bench the lawyers by doing the right thing. Underwrite it properly.
Yeah.
Tell our insured what a claim looks like. This is what we're going to do. This is what you're going to expect. And again, I had claims in the last two storms that hit Fort Myers and the Naples area, 70 insureds. I was down there within weeks with my claims team and we're writing checks. You can't do any better than that.
Rick, do you think carriers, like the national carriers, are just doing this because they realize to actually fight for the insured that's paying them premiums would cost more money to fight it in court, so they're just trying to save money? Like, what do you think's the reason they're doing that? You know what I mean?
Well, I think the you have to like trace it back, as they say, follow the money. And, I think insurers think insureds want the cheapest policy. So if I had a guy here in Utah come to me and he's like, I want to form an insurance company. I'm like, yeah, well, how? Why? He's like, well, my daughter's insurance went up and I think I could do it for less money. And I'm like, oh, so your plan is you're going to be cheaper than cheap, right? That's the part of the plan here is we have to look people in the face and be a fiduciary and say, look, if you want to do it that way, I ain't doing it that way. Because it's not going to end up well. I have a responsibility to take care of you. You ask me to provide you insurance and then you want the cheapest thing. That's kind of two different things, right? Either you want true peace of mind, a plan that actually works. And that's, whether it's litigation I've taken to the Supreme Court in California in one, it's based on the facts. You can't change the facts. So if you write somebody's policy and they have a claim, like in California, if I'd have done that, I would just be writing checks to everybody. And I'd say, look, we shouldn't pay you the $3 million because this was all screwed up, but we're going to pay you the $3 million because we're going to spend that much anyway fighting this stupid system that we've set up. And I do think it's an old system. I mean, like if you put money in a bank, you have $250,000 worth of FDIC coverage. Well, that's what it was in the 50s and 60s. Same with the flood insurance program. They give you $250 on a house, $500 on a commercial.
100.
I mean, that's stupidest shit I've ever heard. It's like, well, the water only comes up, 2 feet. It's only 5 or 10% of the, right? Get rid of perils. Just stop talking about what damage. Oh, that was wind. Oh, no, that was flood. Do I care? I don't give a shit, right? And when people say to me, oh, I don't need earthquake, I always say, well, how the hell do you know? I don't need flood. People in Florida that didn't need flood before with all the new construction, when they build up new neighborhoods around you and you're an old neighborhood, you're at the bottom of the toilet bowl. And there were houses down there that never flooded before that had floodwaters for weeks and weeks and weeks, lots of it. And it couldn't drain out. So, underwriting and claims have to be like an art that you work together, right? You can't do it like, okay, we're underwriting and writing and we'll worry about the claims. I mean, I remember my first storm, Katrina, and, I only had 1,000 homeowners policies down there. But at that point, it was a lot of my business. And we went down there because the people that do it as a outsourced operation, they're sitting there saying, how many claims are you going to give me? And I said, well, if I give you 100 claims, what are you going to do? You going to go see them tomorrow? Oh, no, we got to go hire people. So basically, the first couple of weeks, they don't even have a crew, right? The big guys, Crawford and whoever the big guys are now, they're going to get people from around the country to see if they come work, right? So as an insurance company, if you can manage 1,000 claims in Florida and you write 10,000, I don't know what your fucking plan is. Obviously, it doesn't work. It's never worked since my first storm of Katrina. And everybody wants to make it out like it's, it's different in Florida. No, it isn't. California is the same. And I tell everybody, look, it's coming to a town near you. Tornadoes, all of the values, it used to be a cornfield. Now it's a neighborhood. Convective storms, those are things, I don't know if you guys know who Demotech is, but the Senate, the Democrats in the Senate wrote Demotech a letter basically blaming him that he's at fault for the Florida homeowner situation. And, I don't like rating agencies or all these guys who get money, but they don't take any risk, right? That's what I always say to actuaries. It's like, well, if you were so smart, why don't you just start your own insurance company and do it all the right way, right? But actuaries don't want to take any risk either. What? They want me to pay them 80 grand to tell me how to lose my money. I always tell actuaries, hell, dude, I can lose my money all by myself. I don't need you to tell me how to compete with stupid. I can see stupid. It's kind of like pornography. I know it when I see it, right? It's like you look at it and you can see it isn't going to work. So anyway, I think that it's just old, outdated, and it's evolving in the wrong direction, right? In 1985, I started insuring the land of the misfit toys, and that land is growing. And, when you're not approaching it like, oh, we're going to be the cheapest and we're going to be big and we're going to write all this premium, and then 5 years later, you cancel it because it didn't work out. When you're dealing with people who can't get insurance to begin with, you start out with a better plan, right? And because they're kind of like, tarred and feathered, you're uninsurable. Most people wake up and say, fuck you, I'm not insurable, right? It's like all the homeowners in California, before they started getting canceled, they were a shitty risk. They got cheap insurance that didn't hold them accountable, except it wouldn't pay them if they had a claim. So it was individual nightmares. When you have it across the board and everybody is in trouble, it shows you that it doesn't work. And now when people send me a submission, they're the best risk they've ever been because they know they're exposed. Again, if some guy has $1 million car and he wants to go race it, insurance would insure it for $1 million and give him a $100,000 deductible. I think that's stupid. Right? I think a guy with $1 million car ought to have skin in the game all the way, right? He ought to take 20% of the risk. So if he has a $10,000 claim, he pays 20%. If he has a total loss, he pays 20%. But you don't ever want to take risk away from somebody 100% because that gives them a license to go be stupid. And especially if it's cheap. So, I see it all the time. Insurance goes away. Eventually it goes away. Buyers become, they're taking more risk, so they naturally become a better risk because they're taking their own risk, right? So it's,
Sure.
If you just keep evolving this out-of-date system and you keep kind of adding more fine print and exclusions that you learn from the legal scenario and you reduce the rate, you're just creating a bigger pool for the lawyers and the legal industry. And, again, if we as insureds find people who want real coverage, true peace of mind, we can eliminate almost every lawsuit that insurance now deals with. And the numbers are huge. I mean, I've seen them on Florida. Every time after a storm, they talk about all the litigation. And then 3 years later, everybody forgets about it and goes back to the same old model. So the solutions are there, but buyers have to make better decisions too. And then insurance companies have to move to, today it's modern. It's like a cell phone, right? We're not going to put up with the phone connected to our wall anymore. Let's advance. But you got a distribution system and people who provide services, right? That's why the brokerage market and everything, TPAs, they all want to grow that, buy it. Investors will put money into it because it's fee for income, no risk. There's really no business is no risk. You can get there and then you realize, well, I still have risk because I get sued for my screw ups. I get dragged into lawsuits that I really shouldn't be dragged into, but lawyers like casting this wide net. So I'm against outsourcing. I think that's where the evil all began. And I was there when it started. USF&G, which was one of the old companies, old guard, they did everything in-house like we do. An underwriter, risk manager, and lawyer would underwrite the account. So when the claims came in, the lawyer and everybody was on the same page, and they could determine liability and do the right thing. Then USF&G looks around and says, why do we have all these lawyers? When we can outsource, we can save money and we can get rid of 100 lawyers. Well, yeah, you can save money on your payroll, but are you giving it up on your loss ratio and your underwriting results and all that? So I believe more links in the chain is what feeds the legal system. And we give them an easy target because you're chopping it up, right? I explain it like a football team. The center on a football team, the guards, the tackles, everybody knows the other guy's job and they all help each other. In our business and in my own company, people look at me and say, well, I did my job. I gave it to Bob, right? Well, you got to make sure you have a good handoff and you keep involved in that, or it creates a gap and the linebackers called lawyers can sack you every time you create these gaps for them. And gaps are created by outsourcing. They're created by fine print in policies. And now it's more policies. More policies doesn't help you, right? If I say, oh, I want to write your hotel, but I don't want the liquor, and I don't want assault and battery, and I don't want security, and you can go hire outside security, and that's a risk management tactic, right? Oh, we'll make them carry $5 million, and we'll be in the clear. No, you're not in the clear. You still get sued. And they sue you for hiring the wrong security firm. You should have hired a better security firm. And so if I insure you, I want to cover everything, right? Active shooter. The only thing I can't cover is a criminal act. But in America, it's not a crime until you're proven guilty. And now, like with firearms policies, they exclude if you're accused of a crime. Well, that's not America. So what they're doing is they're stepping away from America, which you can do in a contract and say, if you're accused of a crime, we're out, right? Well, I was accused of a crime, felony assault on a police officer, and I knew it was bullshit. So I want American insurance that tracks the Constitution, that I'm innocent until proven guilty. And my insurance should cover that.
Rick, a majority of our listeners are scratch agencies. Either they're just getting started or in those first couple of years, and majority of them are independent. So they have the different relationships with some of the national companies. We've talked about some of the direct and regional carriers. One thing I wrote down that you said is underwriting and claims need to work together. What can us as scratch independent agencies do to be better managing those relationships for our clients with the different carriers?
I mean, I think the solution, especially for a new producer, because if you're a new producer, you can't get a lot of contracts. You end up going through MGAs or wholesalers, and that makes you less valuable because you get to other markets, but those other markets already looked at the account. I know all kinds of guys who say, oh, if I could have this market, I'd be killing it. Well, no, that other market already saw it, right? It's a small world. So, again, you can go and try and compete against Farmers and State Farm and, the cheaper homeowners market. I've always felt like, why do I want to be the 100th guy in a fight? Why not look for the land of the misfit toys where you can help them more? You bring more to the table. And, most agents or brokers, again, let's take State Farm again, just because I think, and I've dealt with all these guys, Shelter, the captive agents. I always say to them, I'm like, okay, so you won't write the umbrella, or you won't write the trampoline, or you won't give them, what they need. What do you expect them to do? What do you expect your agent to do? Because he can't give them a solution if State Farm doesn't offer him a solution. So every agent should, and there's a congressman in Louisiana dealing with homeowners claims and stuff down there. His name I can't remember right now, but I will in a second. He used to be a sheriff down there. Now he's a congressman. But with Louisiana, his law, federal law, would make an insurance company offer you everything, a DIC policy, right? Difference in condition. And then if you say, I don't want flood, okay, we give you a $2,000 credit and you don't have flood. I don't want earthquake. So you're basically starting from a position where if a lawyer sued you, you could kick their ass in court. The problem is we're not doing that, right? We offer them what we want without what they need. And so, I would tell everybody, look, if you're farmer's agent, your State Farm agent, whatever agent you are, offer them what they think they want. Offer them the cheapest thing, but offer them a DIC policy where you're doing your fiduciary job. You're laying it out there. You're not just selling them what you can. You're giving them the options and letting them make a informed decision. And, then when they buy the cheapest policy and it doesn't work for them, you can go back and say, look, we offered you the whole range, right? And that again would shut down the lawyers because you're not forcing them, you're not steering them to where you want them to go. Again, for the last 10 years, I've been I was a producer, right? Nationwide programs, got an insurance company. I'm like, okay, I want to work with all the big brokers, RT, RPS, Acrisure, all of them, but they really don't want what I have to offer, right? They want to keep doing it the way that they've done it. And because these big behemoth agencies now are getting so big and their investment dollars can't get out, and I've told them all, I've said, look, you bought a guy like Fernie, right? And now your whole model disincentivizes them. They're the professionals that you bought. And now you're shoving them down at the bottom. And I says, your model sucks. I don't know how you're going to attract any good producers or keep them after you buy them. And they said, we don't care. We already paid them. Right? Now they just have to play the game our way. So they're admitting it's a shitty model, that it's not going to, in anything you design as a business owner like me, I want to create a better model. I don't want to look at, what we've done that hasn't worked and compete with that. It's like, how do we do this better? How do we get to a point where everybody doesn't hate insurance and you can look them in the eye and say, dude, I gave you the options, right? I can't force you to buy the right policy. And the biggest gap right now is we don't give them the option. Every agent or broker is steering them to the market they have. And, there's a guy down in Florida that I've done a lot of business with. And, he's not somebody that you can feel comfortable with. And now he's been fired by the big agency who bought his shop. And there's a $3 billion company suing him. And, the guys that are suing him call me and they send me a copy of his testimony. And the insured says, we wanted to go with Prime. And we did some business with this guy, but he would steer them to different markets when he wanted to. And they caught him in the deposition and, they said, so you steered this guy? You took him you didn't give them the choice? And he says, yeah, what's the problem with that? All of us do it. That was his defense, that other people do it. So I can do it. And, why are you making this a big deal? Well, it's called steering, dude, right? You're not supposed to misrepresent and change quotes to steer the client. Just give the client the choices and be honest with them. And then we won't be setting up the lawyers. And again, the lawyers are the beneficiaries of all this. The defense guys are as bad as the plaintiff's guys. They're tools. I always tell lawyers, look, you're like a pitcher in the bullpen, right? You're not the coach. You don't get to make all the decisions. You're back there and you're our weapon if we need you. But as an insurance company, I can settle any claim at any minute. People say, I can't talk to you. We're in litigation. I'm like, well, we can settle it at any time, so we can't talk, right? We just need to settle it. And then you tell the attorneys what to do. And, having been divorced a couple of times, it reminds me of a bad divorce, right? The lawyers get rich, and after your bad divorce and you've given them all your money, then you both look at each other and say, well, that was fucking stupid because we both got less. So, don't feed lawyers. Don't, you want to listen to lawyers, but so I just won a case in Miami-Dade, one of the big national law firms, biggest in the world, sued for $5 million. The jury gave him $0. So what does that say about the world we live in? What attorney would sue for $5 million when he can't get $0? So why do they do that? Because it works. If I have a bullshit lawsuit and I sue you for $5 million, we spend 3 years of our life, $300,000 were at the courthouse steps. They dropped to $1.9 million. Look, I did a good job. I got them from $5 million to 1.9. And I was like, oh, okay. The $5 million was a bullshit number to begin with. When you get into court, the lawyers start saying, hey, we should try and settle this for $1 million or $500,000. So, why do lawyers sue for $5 million? Because they know that most insurance is so sloppily managing claims that they can get $500,000 on a bullshit claim. So, I manage my insured, and then they are the ones who decide what to do. And I tell them, I'm like, I'm going to recommend what, and I'm risking my money, right? I want to get to the best number possible, but we should fight this. In this case, the insured stuck with me and we got a $0. So now they owe us the $300,000 we spent. I got another case where, unfortunately, in Florida, again, the kid lost his leg, right? But it was 100% his fault. We offered him $500,000. He declines it. We get to the courthouse steps. Our defense lawyer calls our insured, and then my insured calls me and says, Rick, your lawyer's saying this is a $10 million case. We should settle it. And I said, well, number one, he isn't my lawyer. He's your lawyer. I pay him. But we've spent all this time and money to fight it, and I told you he was going to do this at the end, because they all do. At the end of the road, they all want to settle. 98% of all cases settle. So that is the differentiator, is you make a decision early on and then you don't change the play at the 1 yard line in the Super Bowl, right? And he said to me, and this was like a pivotal point, he says, well, Rick, I could lose my business. And I said, dude, if you have to pay these types of claims, you ain't building a business. The lawyers are like the bullies on the playground. They will take your lunch money every day. So, what are you afraid of? We got to do the right thing. We got to stand up to the bully on the playground. So in that case, again, we won. And the lawyers call up and say, well, you're not going after our client, because it's not the lawyers that have to pay us. It's the plaintiff. And I said, so if we would have lost and I owed you $1 million, you wouldn't make me pay you, right? No, they would. Right? The lawyer's never going to compromise a settlement. He's going to say, pay me. So, sadly, the kid lost his leg, and he's like, well, he doesn't have any money. He can't pay. And I'm like, well, I know he's got a home in Georgia, and I know he's got a second home in Florida. I'm taking his second home. He got $0. We offered him $500,000. He turned down. Now he loses, and you want me to not get my money back? No. Right. This is like everything else. It's like the border or whatever decisions we make that give away our rights over time. That's what's wrong with insurance. Insurance doesn't want to take risk. agents and brokers, they all used to own insurance companies. Aon, all the big brokers owned an insurance company. You know when they got out? The 90s. Now when they call me and they say, Rick, you don't need to do this. This is the way you need to do it. I say to them, dude, you're a $60 billion broker. Take some of your money, form your own insurance company, and go do whatever the hell you want. But quit calling me and telling me how to do my business. So, again, it's a huge industry. I mean, the size of these brokers, Howden, and, they're hundreds of billions of dollars. And yeah, if you can just get commissions and you don't ever have to worry about the results of, the industry, that's how lawyers win. So I think it's time that we all grow up, put our big boy pants on, pull our boots up, and do the right thing. That's right and wrong, right? You don't insure people in a way where they sue you after. Why not make it clear? And if they don't want everything you're offering, execute it, deliver it in a way where you can go kick their ass because you did the right thing. It'd be like mortgage companies making loans and it all blowing up and suing everybody. No, you have a closing and those documents are done right so that you can go enforce them in court. So, mortgages, people are taking risks. So it's all taken very seriously. Selling an insurance policy, it's like, I made a sale today. It's like, yeah, what nightmare have you created now 10 years down the road? And that's what I look at is the long view, right? When you buy insurance, like it's avocados at the grocery store, there's no long view to that. You're just buying the cheapest thing, and it ain't a grocery store.
Well, Rick, we got to wrap up for time and respect your time for sure. And I just greatly appreciate you sharing all your insight and experience and taking your time to be here. Just can you pitch quickly the podcast and where people can learn a little bit more about your company before we wrap up?
Well, Prime Insurance Company, the website is primeis.com, and we're an open market. Any retailer can come access us directly. You don't have to go through anybody else. My podcast is I Hate Insurance, and I've given myself, because just like now, after this whole deal, I sit here saying, man, you sound like a preacher. So I've given myself the self-given name of the insurance preacher. And, I think it's time that, we all come together and do it right and solve the insurance problems at the root. And everybody needs to make a different decision. Insurance companies obviously control a lot of it because they determine what they're willing to offer and not offer. But there are options outside of that. And, obviously it's comfortable for me. Did I ever think a high school graduate from Utah could form an insurance company and be A-rated and write in all 50 states and talk with Keith and Mick Jagger and write the Rolling Stones concert during COVID? No, but, Acrisure in London called me, had a phone call with Keith and Mick, wrote the policy, and I was either going to be the dumbest underwriter on the planet because I wrote something nobody else would, or I'm the smartest. I don't think I'm the smartest. I just use common sense. And in that case, I was struggling with what to price it at. I could have gone and asked 100 actuaries, right? For a $10 million policy, $250,000 would have been a lot. I think it was under 100,000 before COVID. And I was thinking 750 because obviously I don't want to be a dumbass. They get tired of waiting for me and they say, Rick, we have budgeted $3 million. So I'm like, done deal. Then once I bound it, I started puckering up, worrying if, they were going to set me up for a claim, right? You're never sure about this stuff, but the more information you have, the closer you are, the more it's a team, and there's no Chinese walls. There's no, the Wizard of Oz hiding behind the curtain. Just come out from behind the curtain. Let's do a good, clean deal. And I told Keith and Mick, if you have a claim, I am going to pay you so fast, and I'm going to promote the shit out of the fact that I wrote it and I paid it, right? It's a negative. I had a big claim, but I can make it out to be a positive because I treat people the way I want to be treated. So XINSURANCE.com is our surplus lines broker where we file all the taxes nationwide. That's how agents can come to us directly. And, we just try and keep it real simple. You can have as many I can have a wholesaler, a retailer, an MGA, Doesn't matter how many links in the chain, you still need to have an insured you can make happy. And we do talk to every insured. That's one of our rules. And people say, you don't have to. I'm like, how do I know I can make somebody happy if I haven't talked to them? How do I know what they really want? And, in a claim, I want us to both have a good experience, which is far and few between in the insurance world. So,
yeah, a lot of good insight here. We're going to wrap this up. Thank you again for taking the time. Everybody, thanks for listening to another episode of the Scratch Agency podcast. Until next time, do us a favor, like the show, share the show, and subscribe. Most importantly, remember to dig down deep, believe in yourself, and own your own future. We'll see you next week. Take care.